Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, April 10th, 2013. Well, a very bullish candle today, a candle that's made a higher high and higher low, and a very large white body candle. The white body suggests that the buyers made a significant amount of net bullish progress on the day between the open and the close, and they've closed with very strong control of this market by closing the market up towards the high and shown very strong commitment to taking this market higher. Previous days trading we had that uptrend in place, but we had a small white body candle, so the buyers still had some decent upside momentum, but we had a candle where the buyers lost some commitment around the 1576 level of resistance, and also a spinning top type candle, a candle of indecision. And yesterday I mentioned the very strong resistance around this 1576 level and suggested if we did see good early bullish activity up above that level, that there was a very good chance of this market testing to higher levels, and especially up towards the 1600 round number level of resistance. Now that 1600 round number will be very important to this market if we do see continuation of this trend to the upside. Being a round number and a number at all-time highs that we're now trading at, it does suggest that there is a possibility of some selling coming into the market up around that level, so we do need to watch it carefully. What we need to do is watch how the market actually reacts to that level, rather than preempt that that will be a resistance level. So what we're going to look for is a weakening of the buyers and any potential strength from the sellers. Now that this market is trading in basically uncharted territory, making new all-time highs, we don't really have any other areas of support and resistance to go by other than that round number 1600, which is fairly close by. But we can use our Fibonacci tool to find a target where the market may find some resistance other than that 1600 round number. And the next level here, well, the level that the market's interacted with today based on the Fibonacci extension tool, is the 161.8% level at 1588, and we've seen the market close just around that level on a bullish candle, so we're not seeing any weakness. There was a small amount of downside price rejection as the market tested above that level, but this certainly doesn't look as though it will be a level where the market's rejected from. So the 261.8% level up around 1618 will come into play if the market does trade in a strongly bullish manner up above the 1600 round number resistance. And based on our Fibonacci retracement, we're now in an expansive mode of that. For the previous day's trading, we did have the market test to the 100% on an indecisive candle, where we're looking for a potential change of trend back to the downside, but as I mentioned continually, we do require confirmation, and confirmation would have been a candle with a lower high and a lower low. Failed to occur. We had the market trade in a very bullish manner up above the high of the previous candle and trade to significantly higher levels. Now, based on this, the expansion of the Fibonacci retracement, our next level that the market may interact with is the 161.8% at 1594. So we're very close to that level, but then that's very close to the 1600 round number level of resistance, so it strengthens the amount of resistance within a zone around that 1600. If the market does trade in a bullish manner up above there, we do have the 261.8% up at 1628, and that could come into play if we see strongly bullish activity. Now, in terms of Ichimoku, obviously a bullish market in all three timeframes, what we'd expect with a market that's making new all-time highs. With regard to the cloud, the market's trading up above the cloud, so we have a bullish bias in the long-term timeframe. The market's trading above the Kijun-sen, the pink line, so bullish in the medium-term timeframe, and trading above the Tenkan-sen, so bullish in the fast-term timeframe, in the short-term timeframe. The buyers are supporting this market very strongly at the moment, so all of this does suggest that the market is destined to trade to higher levels. The checkout span here is above the corresponding price action, so it's confirming the bullishness that we're seeing overall in this market and suggesting that the 1600 level will perhaps come into play in the next day or so. And just quickly looking at the angle of these two Ichimoku indicators, both the Kijun-sen and the Tenkan-sen are pointing up fairly sharply, and that's reflecting the strong upside momentum that we're now seeing in this market in both the medium term and the fast term timeframes. And very often, as I've mentioned previously, when we do have strong upside momentum, the Tenkan Sen tends to be the first level of very, very strong support for a market. So we can be quite sure of the level around 1564 holding as strong support if this market does come off. There aren't any signs that that's going to happen at the moment. The only danger here for this market is that when we have extreme bullish days, as we seem to have had today, the market needs to take a bit of a rest. So there is a possibility of that. There's no sign of that happening at the moment, but that is a possibility. And the level that will perhaps come into play is the 1576 level, the previous all-time high that was established some time ago. And there is potential for that to act as support, so that will be a very strong area. You can see here that we have that as a very recent, roughly as an area of resistance for this market, so it should be fairly strong support. Down below there, the 1555 level, now coinciding with where the Kijun Sen trading, should provide very solid support. But everything in this market is bullish at the moment. A test up to the 1600 level is crucial. If we do see selling coming in, there could be a potential change of trend in that first time frame, but certainly everything is looking quite strong in the first, second and even higher time frames.